Okay, so now that we had a chance to look at that in-class exercise that we worked together, and hopefully got a chance to go back through that again and see how we would then work this homework assignment. And this is Connect, guys. We're in Connect right now, and we're looking at Chapter 2. And we're going to get a chance to practice now looking at different transactions. It gives us the different transactions, and then we need to go ahead and record the entry in the journal. So we're in the journal right now, and then as we record those entries, they will be posted to the general ledger. They get posted to a trial balance. We don't worry too much about trial balance here. This would be if we had made a mistake where the debits didn't equal the credits. But if this was a real general ledger software, they let you do it here. But in a real general ledger software, it won't let you record a debit or an entry where the debits don't equal the credits. So trial balance is just a way of glancing to see what the financial statements will look like. But this software is going to pull from the general ledger, income statement, statement of retained earnings, and balance sheet the way we did. I'm not worried about this financial statement impact tab. Okay, so let's just go ahead, and you can see that they give us this transaction here, and they tell us that there was $80,000 cash along with office equipment valued at $26,000 that came in for common stock. So we click on this drop down for our account titles. Cash is usually the first account. Since they brought in cash, that's going to be a debit to cash of $80,000, right? And what? They also brought in some office equipment. Let me see if I can find office equipment. I guess I would need to scroll down here a little bit. There it is, office equipment. And the office equipment was $26,000. So I go ahead and I debit office equipment for $26,000. And it was in exchange for common stock. So I go ahead, go to my drop down again. There's my common stock. Pick that up. I go ahead and put in what? 80,000 plus 26,000 is 106,000, I do believe. Okay, and I go ahead and I put that in, hit return, and that looks good, right? My debits equal my credits, and I am ready to record the entry. So I go ahead, I record that entry, and it's going to ask me to go on to journal entry number 2. But what I want to do with this exercise is I want to see how the computer is going to record that entry. Now, this is your part of the challenge. Is it going to affect the income statement? No, because none of these accounts were income statement accounts. We had cash, we had what? Equipment, we had common stock. So I'm saying this is going to the balance sheet, and we will be able to see cash and equipment and common stock for this $106,000, which was what we recorded it for, my balance sheet balances. Okay? All right, good. So now I'm ready to go back to my general journal. And I'm going to go through this next transaction that I see up here, and let's see if they let me view the transaction listing. I liked it better when the transaction was right there for me. There it is. Okay, that's the view I want. So I'm ready to go to the next transaction. Okay, for the next transaction now, they tell me that they prepaid $9,000 cash for 12 months rent for office space. The company policy is to record prepaid expenses in balance sheet accounts. Everybody puts prepaid expenses in balance sheet accounts. If you pay an expense in advance, and we looked at that in year 2 of the in-class example, or at least we will today, but when you pay an expense in advance, that is considered an asset. Prepaid insurance is an asset. And so I'm going to go ahead and I'm going to click on the account chart here. There's my prepaid insurance, right? Is that what it was? Yeah, prepaid. Oh no, prepaid rent. Sorry, it's not insurance, it's rent. And rent has future economic benefit because you pay it now, you won't have to pay it later as the months go by. So I debit that prepaid rent for what is it, $9,000. Number cell is so please put in numbers. Okay, I thought I did, but let's go ahead and put in 9,000. Maybe I was hitting the O instead of the the 0. Okay, there's that 9,000. And then I'm going to go ahead and I'm going to credit cash because they told me I paid cash up front for that insurance. And so I credit the cash. Okay, go ahead, make that journal entry. Again, the point of this exercise, I go ahead and I record it. And you should be able to tell me now what the financial statement, well, if I paid cash, I know my cash went down on what? The balance sheet, and my balance sheet is now going to show a new asset, which is this prepaid insurance. No impact on the income statement or the statement of retained earnings yet. So I go ahead, I click, and sure enough, there it is. I have my cash, which came down 9,000, but my prepaid rent went up as an asset, right? Okay, so I'm doing a pretty good job on this. I'm pretty proud of myself. Let's go ahead and let's take a look at number 3 here, or April 3rd. The company, on April 3rd, the company made a credit purchase of $8,000 of office equipment and $36,000 in office supplies. Payment is due in 10 days. Okay, well, that's a what? That's a bill. That's a payable, right? Remember, they're going to let me pay my bills later, so that's going to be a liability. So I go back to the general journal. I go ahead and view my transaction list. No, that's not the view I want. I want view general journal. Okay, there we go. And I'm going to go ahead and do this transaction number 3 now that we were just looking at. And so I go to my account title. Account title here, if I'm purchasing office equipment and supplies, office equipment is going to be, well, there's my office supplies, office equipment, and that's what, $8,000 of office equipment, right? And I'm sitting here, and my next account is going to be my office supplies. Office supplies right there. I purchased were worth $3,600, and that whole thing was going to be on credit. So that's what, $11,600 of a credit for my what? For my, now I have to go to my bills, my account payable, right? And I say it funny like that on purpose. I know you get tired of hearing me say it funny like that, but I just want you to remember that account payable is a liability, right? And we have this $11,600, right? Oops. Okay, good. So I entered that entry. I go ahead, and again, we have an entire balance sheet account, don't we? We have assets, we have liabilities, okay? So I go ahead and I record that entry, and when I look back at my balance sheet, I've been skipping my ledgers, haven't I? Let's just look at the general ledger real quick, because we're supposed to go from the journals to the ledgers and then pull the financial statements. So I forgot to look at our ledgers here a little bit as we went ahead and posted. Remember that first 80,000 came in, and then we went ahead and posted the debit to cash of 80,000, and then I think he also gave this office equipment of 26,000. That was that first entry on April 1st, and so that gave us the stock of 106,000. So they posted in the one that we just did, where we had purchased office equipment and supplies. There's my office equipment. That's an asset. There's that amount that I just purchased it for, the 8,000. And then there's the office supplies at 3,600, and I have now a bill 11,600, right? But again, it's all on my balance sheet, okay? And the computer is really helping me. I mean, look how quickly we've gone through these many transactions and already have our financial statements pulled versus the way we were tediously doing it by hand before, okay? So let's go ahead and let's do this number 9, okay? I'm not going to do this whole thing for you guys in part because we're going to do this in class together, and I don't want to ruin all the fun. And also, I'm sure you're getting tired of watching these videos. I don't know if you're as tired of watching it as I am talking to myself into the computer. So let's just go ahead and let's take a look at this number 9, okay? And let's try to get that one into the journal. So we go ahead, and they're going to let me view the transaction list. I keep doing that, and that's not what I want. I want to view the general journal. And I'm just going to fast forward to transaction number 9. Okay, and the company completed work for another client. I guess it wasn't transaction 9. Which one was the one we were just looking at? I want to do that one. Company paid $11,600 to settle the payable. Okay, well, where is that one? Okay, let's just do this one. I can't find that one we had, but let's just do this one now. And let's say here they say they completed a project for a client who must pay within 30 days. Well, if that's the case, then we have a receivable. We have an account receivable that's going to come in from that individual. Okay, and so we debit the account receivable for $6,000 because that's a future economic benefit. They're going to pay us in 30 days. We go ahead, and since we provided a service, we're going to go ahead and we're going to find our service revenue. There it is, service revenue. That's going to be $6,000 because we provided that service to them. We go ahead, we record that entry, and again, our approach should be, and I was jumping straight to the financial statements before, but let's go ahead and let's look at my ledgers for this one, and we go ahead and we can see that we have the service revenue, $6,000, and we have what? We have an account receivable now, $6,000. It gets posted to the ledger, and now what would you think the impact's going to be? Let's think about that. Well, we're going to go ahead and we're going to see that in the balance sheet now, we're going to have that account receivable of $6,000, but where's the revenue? Revenue is on the income statement, and right now, since we only have that revenue, we're sitting here and we are seeing that we have our net income of $6,000. Okay, so this is pretty fun. Let's do one more. Okay, let's go ahead and let's pay a bill. Okay, let's incur an expense. How about that? Okay, $435 for this month's utility bill. How about this April 30th transaction? Okay, so we're going to have to go ahead and get ourselves to April 30th. And let's see if I can do this right this time. I'm going to start at the general journal. I'm going to view the general journal, right? I'm going to go all the way to that last journal entry, which was the April 30th, pay the light bill. I'm going to go ahead, and since I am paying a bill, that is going to be an expense. Once you pay, when I pay this bill, since I'm paying cash for it, right, it is going to be an expense. Maybe my expenses are a little further down. No. Where's my expenses? Revenue, common stock. I know there's other accounts down here because I just saw them. Okay, don't know where my expenses are. Don't know why this thing has locked up on me. It's clearly locked up on me, though. That seems to be the problem. Okay, so let me try that again. The company paid $435 for the utility bill. Come down. Utility expense. There it is. I don't know why I wasn't there before. And it was what? $435. So I'm going to go ahead and debit the $435. And then I'm going to go ahead and what? Since I paid cash, I will credit my cash for $435. And I go ahead and I record the entry. Okay. And when I do, now I'm going to first see if it has posted correctly into the ledgers. Let's see. There's the credit to cash for $435. There's my service, my expense, my utility expense, a debit for $435. Now let's see. We go ahead and we look at the balance sheet, right? And we know the cash now is a little less. The cash is $70,565, and I can always go back to my ledger to see what the amount is supposed to be on my financial statement. But now, if I look at the income statement, I see that expense $435. Now it's showing me that my net income is 565. Now, I don't think this problem was expecting me to do closing entries, but let's just look at my statement of retained earnings. Yeah, beginning balance was 0, add net income. We haven't done anything with the dividends yet, so my retained earnings is 565, and so they didn't actually make me go through closing entries to get to my retained earnings and make a set of closing journal entries. And if I was really doing this, I would have to make closing entries to get my retained earnings to be the correct balance, the way we looked at it in that example. But let's just look at the balance sheet. And I think the reason they're doing this is they don't want you to panic when the balance sheet is out of balance if you haven't actually made journal entries to do your closing entries yet. Okay, so, I think that's a nice little exercise, and I assigned all of these in Chapter 2, and we're going to work with these some more in class if you have Connect. If not, we will, play with them in class, and everybody will get a chance to come up and try some of this. And this is the way it's done these days, much cleaner than what we were doing with that Excel spreadsheet in the other video. Okay, guys, that's it for this one, short one, and I will see you in class again on Wednesday, okay? All right, study hard.